XRP is looking healthy to smash past $3 over the coming weeks. In today's lesson, what we're going to focus on is technicals, how you should be thinking in probabilities and never certainties with all crypto. But today, we're going to use XRP as the example because it's forming a textbook particular pattern. And when you see this in any market, you want to pounce and get ready. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on trading currencies, but now exclusive on cryptocurrency. So let's dive straight in. Quick reminder. Elliot waves is such a powerful way of measuring human psychology when it comes to fear and greed. And the typical pattern that you'll see unfold time and time again is a movement to the upside and then a movement to the downside. And we call this a wave one and a wave two. But what we want to pay attention to, I'm going to show you XRP, but it applies to many, many cryptos when you'll see these patterns unfold around 60, 70, 80% of the times. This wave one tends to typically break down into 5 waves in itself. Right? You'll see this time and time again. And this is telling us how the mass herd psychology is feeling in terms of buying and selling behavior. What tends to follow after a 5-wave sequence is a nice ABC correction. ABC correction. And then this is the point where I believe XRP is, because what tends to happen next is a wave 3, and a wave 3 is aggressive. It's impulsive. And that's where we anticipate big upside movement. Now, we can only do probabilities and never certainties. But if you want to learn this in more detail so you can have a more higher edge on the market, take my free Elliot and Fibonacci masterclass. I've worked incredibly hard to simplify this. So it gives you an edge. So when you're looking at your price action charts, what's happening, if price is moving down, is it just a healthy correction before a wave 3? And we want to be able to prepare so we can buy at the optimal times and then sell with maximum profit. So let's dive into a live chart with XRP. So what we know, I haven't done a video on XRP for a while, but a few of you are commenting on XRP, so I thought, actually, this looks textbook. So I've actually just taken the data back. So just so we're on the same page, this is not today's data. This is September, and I've done that for a reason, and I'm going to show you why. Because we got to get the thinking right for all crypto, for all your positions. We can never have certainties. We can only have probabilities, and ideally high probabilities. So what we've had is, since, when was this? This was January earlier this year. We had a nice upside movement and then a macro correction, right? It's not necessarily that clean, but it's pretty much a really clean, a move up and a move down, right? And then what we're going to focus on today is really this part of the market, right? Because this looks like it's clean. It's going to hold this wave 2 low. It's going to hold, we've had a nice movement to the upside, down movement. We've had some more movement over here, but there's a couple of things I want to get clear so we can really be on the same page and how you should be thinking, right? Now, as of September 22nd, we did a video on XRP, and what this showed to us was a couple of things. This at the time, we had no other reason to believe otherwise. This looked like an A, B, if I can get this joint, B, and then a C. And this actually met our minimum requirements, minimum requirements in terms of ratios. We have something called a Fibonacci retracement. I'm just going to do it fast. I covered this in more detail in the free masterclass of Fibonacci and Elliot waves. But the typical correction zones is 50 to 62%. And the 78.6 is the typical maximum. I'm going to keep these here because it's really, really relevant. But we had a few different reasons to believe that this here was the end of a correction, and then we should see a continuation to the upside. But we have to remember it's never guaranteed. And today, the patterns unfolded differently, because what we need to ask ourselves is, if the market moves up, what would invalidate the current wave count? And if that invalidation occurs, we need to reevaluate, right? Reevaluate. So the market moved up. Let's just have a look at this. I'm just going to now plug some data. The software is TradingView. The market moved up. Okay, it's looking healthy. So it's like, okay, analysis is on point. Right, it's looking healthy. Now, if you're trading XRP, there's ways of doing it where you can be risk-free at this point. If you entered down here, nice entry point, risk-free over here, but you might be looking for the bigger moves, or you might have bought XRP ages ago and just waiting and holding so you get a bigger picture. So here's the thing that we need to do, right? This is really, really important because most people miss this. And this is where they get burnt because they overexpose themselves. So I'm going to change this to a red. I'm going to make the numbers a bit smaller. And I'm going to move this to, I'm going to change this to, I'm going to write 2. 2 with a question mark. What I mean by this, you see, I'm going to use this in a second. I'm going to just leave this down here. Ignore that for a second. This 2 is basically saying this is a wave 1 up and then looks like a wave 2 of wave 3 with a question mark. What will invalidate this wave 2, this not being the wave C, is basically if the price goes below this low down here. If this doesn't hold and the price goes below, if I just get rid of this, if the price still reverses and goes below this, then we have to reevaluate, right? We can expect maybe a correction to the downside. So even when the market moves, I'm going to unfold a bit more data. Even at this stage, I think it was, even at this stage here, it's not clear. Like right now, it looks good on the upside, right? There's a few other things we can take into account, but it kind of looks like a 1, 2, 3, 4, 5. We got no other reason to think it might do a correction and then a continuation. The only thing that's going to invalidate our count is this point here. This point here. So important. This here, right? I'm saying this for a reason. Why? Because we did get a movement to the downside. So even here, right? Even look at this. We can argue very, very clearly that this looks like a 1, 2, 3, 4, 5. There's a few, sketchy parts of this that is not the cleanest of 1, 2, 3, 4, 5s, but that's what it looks like overall. But recently, Bitcoin went down, XRP went down, and everything went down, right? And recently we broke that low. We invalidated the wave count. The price, we didn't do it. The price did it. We can only take the information and we can only do probabilities and never certainties. This is a great lesson for all your projects. So now, nothing personal. We love XRP. We hate XRP. You're neutral about XRP. That doesn't matter. We're just looking at the price action and the human psychology buying and selling behavior. It's a more of a complex correction. It's a drawn out correction. It's taken longer than anticipated. But the fact of the matter is the price has gone below this line here. So this no longer can be a wave 2, right? In my Elliot Wave Fibonacci masterclass, which is in the link below, I covered the rules and the guidelines. The rules and the guidelines. And this was figured out over a century ago. And it applies to all markets and all time frames. So now we're going to reevaluate the market based on the new information. So let's just take the price data to today. This is now today's price data. So what we can do is we can delete this and we can go, well, this is no longer relevant. No longer relevant. This is still relevant. This over here, this retracement, but we've got new information. So what this looks like now is this looks like the wave 2 of wave 3. Got wave 2 of wave 3. What does that mean? All right, it's a great question because I can hear you thinking it. If this is a wave 1 and a wave 2 on a macro degree, we expect a macro degree wave 3. But this wave 3 also tends to break down into a 1, 2, 3, 4, 5. Right? And that's what we want to be aware of. So we're going to focus, again, I know I'm talking fast. If you're not used to Elliot Waves, first time you're seeing this, do take my free masterclass because I just break it down in a bit more depth. So now what we're going to do is going to be really cool. You're going to love this. And this is going to be high probability, but we can't do certainties, unfortunately. So what we're going to do now, we can get rid of this line. We're going to say, right, this now looks like the new wave 2 of wave 3. It looks like a drawn out, like a longer ABC correction. This now looks like an A. One of the guidelines for a wave A can either be in a 3-wave sequence or a 5-wave. Most people don't know that. And what I mean by 3 waves, here we got A, B, C of an A. That's possible. This now looks like an A, B, C of a B. And then this looks like an impulsive wave C to the downside. It's reaching this maximum 78.6. So this by itself is not enough information. We don't want to just go by Elliot waves. Elliot is powerful, but not by itself. So the second thing we want to look at, which is actually the first thing that I look at, is I'm going to jump out of this chart. This is a daily chart. I'm going to jump into a weekly chart. The weekly momentum is now officially, because before, one of the bits of information that we took in my previous analysis, this here, I'm anticipating this upside movement coincided with this weekly bullish momentum reversal on the upside. But we had a bearish movement, but now the weekly is deeply oversold. I don't know if you can see that. Hopefully you can see that on my screen. Let me just do it like this. This is deeply oversold, meaning that when the blue line crosses over the red, which should be probably next week, we should anticipate sideways to up for 3 to 6 weeks. 3 to 6 weeks. Because one of the big questions is, when Bitcoin's going down, is money just going to flow out of Bitcoin and then stay out of crypto, or is it going to flow into altcoins? And often it will flow into altcoins eventually. So now we know the weekly momentum is pointing up. So now the trend is looking for a big reversal to the upside, and then we should only be looking for buying opportunities when it comes to XRP. But even though we're talking about XRP, this applies to all crypto, right? It's important, whether it's low market cap, whether it's cross wallet, cross swap. I do a lot of stuff on low caps, whether it's what we're looking at the moment, Astro swap. I know that's going a bit deeper, but these patterns apply. But the main lesson today is we can only ever do probabilities and never certainties. But what else do we have? Okay, well, the momentum on the daily is also overbought, so oversold, and we should anticipate a bullish reversal. Hopefully you can see that. Let me just pull it up like this, right? So now the daily momentum should be to the upside over the immediate next few days, which is going to be in line with the weekly. So that's positive news in terms of momentum. But what we want to now do is take our Fibonacci price analysis to the next level, right? We've only done the basic retracement, right? But what we want to now do is look at these waves, because this wave A has a direct relationship with this wave C. And the most common relationship is that they are the same, almost identical, more often than not, in price and time. Oh, what did you get? Price and time? What does that mean? Well, we're going to measure. There's a tool on. I covered this in the masterclass. So if you're not used to this, it's worthwhile taking. We're going to measure this wave A, and we're going to project it forward from this wave B. And the key ratio that we want, there's two, but the main one is this 100%. And you can see that is right into this zone, right? Right into this zone down here. I'm not going to get rid of these two because these are not as relevant. This and this, because we're now going into the 78.6% retracement zone, which is a typical maximum of a wave 2 correction. This line here, which is measuring this move up and a correction down to this psychological selling area. It's a deep correction, very, very important. And now we've got an extension where we measured wave A, projected it from B, and we've got this. Now we've got a cluster on 2 different time counts that's telling us this is a very important role. So now we've got pattern, ABC, we've got momentum on weekly and daily, and now we've got 2 Fibonacci ratios. But can we get more information? Yes, we can. What we're going to do next is what most people don't realize is, from a psychological perspective, this wave B, what now looks like an A, B, C in hindsight, because it is in hindsight because now we've got new information, this has a relationship to wave C. What is the most common relationship? 2 ratios. Again, by the way, if you do take my Fibonacci and Elliot Wave Masterclass, which is free, at the end of it, I give you the opportunity to buy one of my courses, which is hugely discounted. And not only will you get a private invite to my private Telegram group, where you'll get premier access to this kind of content and some other bonuses, I cover this in bite-sized lessons, in literally 5-minute chunks, in really the foundation, the intermediate, and the advanced. And you can watch it at your own speed, pause, rewind, and you have full access. So what we're going to do now is we're going to do an external retracement. We're going to click this low to this high. We're going to have to click this cog, and we're going to have to collect these ratios. And the 2 key numbers are 1.272, which is up here, and 1.618, which is down here. So now we've got this really clean cluster. We can do a few other things. We can even go into a lower degree time count. I'm not going to do it today, but we could also, I teach this in the course, you could go to a lower degree, and this wave C normally breaks down to a 5-wave structure, and we can get even more precise. By the way, I know one of you asked me settings. So settings on TradingView for momentum indicators. I normally use 8533 or 13855. And stochastics length is the biggest number. RSI length is the second biggest number, and the D and the K, don't worry about what that means. We don't need to get overly analytical. Let's keep it simple, is the lower two numbers. And these are Fibonacci ratios. So it's normally either 8533 or 13855. They're the most two common that I use. But the main thing we're looking for is that they marry up with the highs and the lows. Because we can also, I've got them preset over here. This is the 13, and you can see that this one's slower, but is a bit more smooth. So you can wait a few more days for the next bullish reversal. So this one has pros and cons. And then the 8 is faster, but it also catches the intermediate waves as well. So you can kind of use both. Ideally, you want both of them pointing in the same direction, but that's just a bit more advanced. So what we're going to finish on today is time, right? Let me get rid of this line so we can see it more like this. Time is such a powerful indicator for us. Again, it just gives us a bit more confluence, as in a confluence of event, multiple events telling us that a particular outcome is likely. So what's the time analysis? Well, there's two, right? Two. First, we're going to do something called a time retracement. I'm going to tell you what that means. We're going to measure how long did it take to form this, and then we're going to do a retracement into the future on when is the typical correction. And we're beyond that typical correction already. So we're beyond the typical extreme. So this is the typical. I'm just going to get this high, bam, bam. And the typical ratio is minimum of 50% is most common. Typical maximum is 100%, and the extended maximum is 1.618. Now, we are clearly beyond the maximum, right? We want to be very, very aware of that, right? Which means we're overdue a movement to the upside. We're beyond this. We're beyond this. But like price, time is also really important when we're comparing wave A and wave C. I'm just going to make this into an intermediate wave count so we can see it a bit clearer. Intermediate, bang. Right? So how do we do this? Right? This is so powerful. Like, most people don't use this. So powerful and simple once you know how. And I cover this in a few different areas, but I cover this in a lot of my videos. So we're going to measure how long it took to form this wave A. We're going to click on it, double click, and then we're going to go to this wave B high, and we're going to click again. And the two ratios that we want is more often than not is the 100%. And you can see it actually overlaps here. It overlaps. You can't even see the line because it overlaps. And then the typical maximum is 1.618. So now we are beyond the typical extreme of the correction, because in advance we would have said, this is the typical extreme that we should anticipate the correction to finish. And we can see that we're beyond this range now. We're beyond this range. So over the next couple of days, we should anticipate the low. You heard me say at the beginning, right? But this applies to all cryptos, not just XRP. XRP is just the example that we're using today is $3. We go, Jiggy, what was you basing, XRP to explode to $3 over the coming weeks? Because you'll find that I just do logical conversations here. What we're looking at here is a wave 1 of wave 3, wave 2 of wave 3, and one of the most explosive moves is a wave 3 of wave 3. You might, if you've taken my masterclass, you know what I'm going on about. If you haven't, you're probably thinking, what is he on about? All right, so I just want to make sure we're all on the same page. I'm going to use a different color for this. The macro wave count is a wave 1. I'm going to use let's just change this color to, let's change it to green, yeah. Macro wave count is a wave 1, wave 2, and then we anticipate a wave 3. Yeah, that makes sense. Hopefully that makes sense. Yeah, this is what we're anticipating on a macro level. And then on a micro level, on intermediate level, I'm going to change it like this. Let me see if this. Now I'm going to change this back to blue. I'm doing it deliberately like this. I'm taking my time because I know sometimes if I talk fast, I'm taking too many things for granted and I might not be making perfect sense. This next blue wave is what we're anticipating for $3. I'm going to be more precise in a second. Then we should anticipate a wave 4 of a wave 3 and then a wave 5 of a wave 3, which often, not guaranteed, but often will pan out like this, right? This is what we're looking at. So the next part of this movement is this part here. This is what we're going to focus on over the next coming weeks. This is what's due like now, like literally now. Not guaranteed, it's just due. So now let's just get rid of these. Let's get rid of this. We're going to focus on this. All right, so how do we measure this? So we can project with high probability, I'm going to say it, high probability but never certainty, that the price action, the typical wave 3, we can measure this wave 1 and then project the price projection from this low to see where is the likely buying behavior, the next logical psychological price points. Where is it? Where is it? Well, the two ratios, the most common is 1.618. So we measure this and we're going to project forward 1.618. So this red line that you're seeing on the chart at the moment, we're guessing at the moment because it hasn't been confirmed, is 100%. That's not what we want. What we want is 1.618 to 2.618. And in crypto, often it overextends to the 2.618. And that's where $3 is. This is $3, and the typical minimum is $2.15, $2.14, thereabouts, right? So what do we need to happen for this to be confirmed? Well, the major confirmation really is, let's just do it like this. I'm going to zoom back in over here. There's a few. The ultimate confirmation that this is looking healthy for a wave 2 over 3 low is that the price exceeds this high over here. But here's a challenge that you're always going to have. If you wait for the price to exceed this high before buying, well, a lot of this price movement has already happened because this is like 70 cents, around 70 cents today, and up here is like $1.40. So, we don't necessarily wait that long because here, I mean, most of you are probably holding XRP already and just looking at what's likely to happen next. But here you want a logical buying opportunity. So the first real indication that we've got the reversal, there's a couple. One, it trades into this range. 2, it closes above this range. And 3, it closes above this range here, right? And each of the latter ones is more confidence. But the first thing that will give you the biggest clue is these corrections. This is the biggest correction to the upside over here. If the price movement is, let's get rid of this. Let me just zoom in over here. If the next price movement, if and when it's bigger than this arrow here, bigger, even by, a little bit, 20, 30, 40% bigger, this is called an overbalance in price. On the first pullback, could be one of the most safest place to buy. And if you're using a stop loss, it'll be below here. But anyway, I'm getting a bit detailed now. I'm getting too detailed. Today's lesson was all about Elliot and Fibonacci. We're using XRP as the example. And to wrap this up, let's just clean up this chart. To wrap this up, the main thing that we are looking for is, I'm going to clean this up as well. Let's get rid of these. What we're looking for is, we've seen this beautiful wave 1 over wave 3. This is what it looks like to me. A really clean A, B, C zigzag on the extreme of time. And then we're anticipating a nice wave 3. And it can happen quite fast because often wave 3s are takes the same amount of time as a wave 1. And this particular wave 1, I'll just measure it and I project it forward. Let's just go hit. And let's just go for this one. So it might be complete even by mid-January. And that's a good price movement. That means XRP's market cap going up by 3 times, over 3 times, nearly 4 times, because it's 70 cents today or thereabouts, and going to 2.618, which is over $3, is a huge move for a massive market cap project. In fact, let's just have a look. If I just jump into coin market cap, we just scroll down, we go to XRP. Where's XRP? XRP, the market cap is currently 37 billion. 37 billion. So what that means, if 37 billion, there's 9 zeros, right? Let's just keep it as 37 billion. Keep it like this. Times by, well, actually, let's just do it like this. $3 divided by 0.78. That's today's price, give or take. It's 3.8 times. 3.8 times. So 3.8 times 37 will take XRP to $140 billion market cap. And as of today, if that was today, that will take it to number two. Number two. Obviously, like Solana is probably going to increase by then and Cardano as well. But for today's market cap, that will take it to number 2 position behind Ethereum, right? So that's likely to occur. So we got, let's summarize. We got weekly momentum looking to reverse. That's information number 1, right? Daily momentum looking to do the same thing. There's 2 pieces of information. We got Elliot wave pattern on a wave 2 and an ABC. That's 3 pieces of information. We got a Fibonacci retracement zone 78.6. That's 4 pieces of information. We got the 100% price extension of a wave A to a wave C. That's 5 pieces of information. Then we've also got an external retracement of 1.618 to 1.272. That's 6 pieces of information. We got extreme time analysis is beyond the extreme time. 7 pieces of information that says it's probable, highly probable, that XRP will do a reversal and go beyond this high, go even beyond the January high, and then go towards the $3 mark. And if you want to learn how to do that in detail, take my free Elliot Wave and Fibonacci masterclass. I spent so much time because it is a complicated space. You know, Elliot Wave, Fibonacci, there's degrees of counts and this, that, and the other. In the masterclass, I cover it in quite a high level, but it gives you a nice feel for how you should be looking at the markets to get the feel for what's likely to occur next. And if you want to do a deeper dive, you can take the course. And if you buy one of my courses, which are hugely discounted at the moment, you'll get a private invite to my private Telegram where you get premier access to this kind of content in terms of YouTube content. But we also do workshop. We do some other bonuses. And there's a great community, an amazing community. So like, subscribe, hit the bell notification. Let's finish on a quote. What's today's quote? Today's quote is on chapter 3 in my book. It's called, all right, there is a solution. It's called the TRCP. I have this thing called the Rubik's Cube philosophy, which is all about not reinventing the wheel. You know, I see the Rubik's Cube as the world's most impossible puzzle. But I learned how to do it in 7 hours, and now I can do it in under a minute. And you've probably seen me, I've done it in one of my videos doing the Rubik's Cube. But the method or the lesson is anything is possible, right? And it looks impossible, but there's method behind the madness. But the quote in this chapter is from Confucius. It does not matter how slowly you go as long as you do not stop. Now, if you're learning Elliot Wave and Fibonacci, know that blockchain's here to stay, crypto's here to stay. This new token economy where we're getting creations into value or value from creations in all different aspects of life, whether it's decentralized finance, whether it's GameFi, whether it's NFTs, whether it's play to earn, whether it's your new insurance policy and mortgages, of the future will be done on the blockchain. All of this is just learning. So it does not matter how slowly you go as long as you do not stop. When you're learning Elliot Wave and Fibonacci, first just focus on the basics. In my course, I cover it as foundation, right? Foundation, like real bite-sized chunk lessons, 5-minute lessons, and the real foundation. And then move to the intermediate, which covers a bit more of the detail, and then the advanced. But it kind of moves in a nice flow, and I'm getting great feedback for that course. And then we move over to Fibonacci retracements, external retracements, Fibonacci price extension, but how that relates to Elliott waves. Because most people just use Fibonacci retracements independent of Elliott waves. I go, hey, you're missing a trick, because these waves within waves have direct relationships. And if you can understand those with Fibonacci ratios, you can project with high probability where the top's going to be, so where you should look to take profits, and where optimal entry points are going to be, where compounding opportunities are going to be, where stop losses should be for using a stop loss, and so on and so forth. So it just gives you edge on the market. So keep learning, keep doing what you're doing. Take my free Elliot Fibonacci masterclass, and I'll see you soon.